When you send cryptocurrency, it is broadcast to the mempool, short for memory pool. This is a decentralized waiting room where thousands of unverified transactions accumulate, waiting for a miner to process them. Miners act as the network's auditors. When building a new block, they select transactions from this pool, prioritizing those with the highest attached fees, measured in satoshis per byte. Every selected transaction undergoes a mandatory verification. First, the miner software checks the digital signature, confirming the sender holds the private keys to the funds they are attempting to move. Second, the miner verifies unspent transaction outputs, or UTXOs. This check scans the network's history to ensure the coins exist and haven't already been spent elsewhere, preventing the double spend problem. This initial auditing phase serves as the primary barrier against fraud. By requiring valid signatures and verifiable outputs, miners ensure only legitimate transactions ever reach the final ledger. Verified transactions are organized into a mathematical structure called a Merkle tree. This involves compressing the raw data using the SHA-256 cryptographic algorithm. Transactions are paired and hashed, A with B, C with D. This pairing moves up the layers to the apex, the Merkle root, a cryptographic fingerprint for the block. Changing a single character triggers an avalanche effect, completely altering this final Merkle root. This structure provides immutability. Because the root at the top depends on every piece of data below it, any attempt to retroactively change a transaction would be immediately obvious to the rest of the network. Hashing every transaction in a block for the mining puzzle would be computationally inefficient. Instead, miners hash a condensed 80-byte string called the block header. This header contains 4 fixed data points: the software protocol version, a timestamp of the current time, the network's difficulty target, and the hash of the block that came immediately before it. The miner then adds the Merkle root and a final variable field called the nonce, a 32-bit space the miner can change as they try to solve the puzzle. By including the hash of the previous block, the header cryptographically links the new transactions to the entire history of the chain. To find a valid block, the miner runs the 80-byte header through the SHA-256 function, which outputs a fixed, unpredictable 256-bit alphanumeric string. The network sets a target, a specific numerical value. For the block to be accepted, the miner's generated hash must be mathematically less than or equal to this target. Because the output of SHA-256 cannot be predicted algebraically, the only way to find a winning hash is through brute force. Miners rapidly change the nonce and rehash the header trillions of times per second until they find a result that hits the target. To maintain a steady 10-minute block interval, the network adjusts the difficulty every 2016 blocks. If more miners join, the target number is lowered, shrinking the window of valid hashes and making the puzzle harder to solve. This requirement for physical work makes the network resilient. An attacker cannot simply rewrite the ledger. They would have to outguess the entire collective hashing power of the rest of the network combined. Once a miner finds a nonce that satisfies the target, they immediately broadcast the block header and transactions to all other nodes on the network. The system relies on computational asymmetry. While the winners spent trillions of guesses to find the nonce, every other node only needs to run the calculation once to confirm the result is valid. If 2 miners find a block simultaneously, the network follows the longest chain rule. Nodes continue building on whichever chain they received first. The chain that grows to include the next block first becomes the official record, and the other is discarded. This rapid global agreement cements the block. The transactions move from the temporary mempool into the permanent record of the blockchain. To compete for these blocks, mining has moved from personal laptops to industrial facilities. These immense warehouses utilize megawatts of power to drive the high hash rates required by modern network difficulty. These facilities house application-specific integrated circuits, or ASICs. These processors are designed for the sole purpose of executing SHA-256 calculations at maximum efficiency. Miners invest in this hardware for the rewards, the block reward of newly minted coins and the sum of all transaction fees. In the Bitcoin network, this block reward is cut in half every 210,000 blocks in an event known as the halving. This immense expenditure of energy and capital creates a financial barrier. By making it more profitable to earn rewards than to attempt an attack, the protocol aligns individual economic interest with the security of the shared ledger.